There's no stopping the bulls. The market closes at a record high. The Nifty surpasses the 24,600 mark for the first time to hit new highs. Buying in mid-caps continues. The index outperforms in trade.
Short in the arm for Aurobindo Pharma, gains over 4% after the board will be considering its maiden buyback. Tire stocks soar on price hikes. MRF announces price hikes effective July 18.
Strong asset growth lifts IREDA in Q1. The stock gains close to 3%. HDFC Life jumps after its profits jumped 15% in Q1 on a yearly basis, while Bank of Maharashtra rallies close to 5% on a strong showing in Q1. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points that took place today and also gear you up for tomorrow's trading session. I'm Nigel D'Souza and joining me as always, my colleague Surbi Upadhyay. Hey Surbi, another good session for the bulls.
Absolutely, and very well rounded. I mean, this was not just one sector, but the mid-cap market was also doing well. So plenty of movers and shakers, lots to talk about. And we will have you sort of go over it over the next 20 minutes. All the big news, the key developments on the Lal Street today, the top corporate voices and the events to track ahead. But let's start off by recapping what was a good day, Nigel.
Well, it was a good day for the bulls, a good start to the week, and it's a truncated one because we have a holiday on Wednesday itself. But the IT space, that was the one that was expected to fire even today. But I'll tell you what, the street had preempted this beat from HCL Tech post-TCS, and that's why actually some of these tech names came in for some profit taking. Keep in mind, the index itself was up 4 to 5% in Friday's trading session. And in the last 45 days or so, it's up more than 12 to 13%. So that did come in for some profit taking. But there were stocks that did do well, stocks with some valuation comfort, stocks like ONGC, where the street believes Oil India did see a bit of a re-rating. ONGC as well could do well, and that was one of the biggest gainers. And you look at the top three gainers on the Nifty, well, all of them came from different sectors. So ONGC from the oil and gas space, from the financial space, Shriram Finance, that stock post its addition into the Nifty has given you a quick fire 20% itself. And Bajaj Auto as well was up close to 2.7% ahead of its numbers. On the flip side, we did see some profit taking. You know, stocks like Cummins did come in for some profit taking. So that underperformed in trade today. Maybe the valuation headwind is weighing on that stock. So that was down close to 100%. And V-Mart Retail at one point of time, well, if you pull up an intraday chart of V-Mart Retail, the stock was up close to around 3-4% odd. It ended more or less flattish. And, intraday, if you just look at that chart, it even dipped into the red, and from there, in the final out of trade, it did see a bit of a recovery. But otherwise, that stock was a little bit weakish. It's had a good run, came in for some profit taking. And the advanced decline ratio, yes, we had more number of stocks that are advancing than declining. But towards the end of trade, those lines got a little bit closer to each other. Just take a look at that. You know, close to around 1,300 stocks advancing, but those lines pretty close by the time we wound up, Surbi.
Absolutely. And even on the IT side of the screen, which is where we had a little bit of profit taking, it wasn't too much. I mean, it wasn't a major slide or anything, but it's just that after Friday's massive surge, there was a bit of a cool off on the IT side. So the IT index finally dipped into the red as we were closing out for the day. But otherwise, a very, very good session with the mid-cap index flying and really taking the cake in terms of the top gainers tally, and that's the Nifty, up about 0.4%. Well, let's tell you about the lineup today and what we have for you. We'll start off with all the key movers and shakers. Vivek will give us the lowdown on that. In terms of stocks in focus, Aurobindo Pharma is in the spotlight. The board is going to be considering a buyback proposal. Tire stocks are up and about on the back of price hikes. Also, a whole bunch of earnings coming in, so we'll tell you more about those stocks as well. And of course, then we will dive into all the key events to watch out for tomorrow's trading session. But first, the movers and shakers. Let's go over to Vivek.
Well, thank you so much for that. Another day, another record as far as the street was concerned. A whole host of stocks that did well today. First up, we are focusing on one particular pack today that did especially well. Have a look at the PSU banks, especially the mid and small cap names over there. A lot of these stocks today did very well. Even a name like IRB up over 7%, Canara Bank up 4%, even Indian Bank ended over 3% higher. The second set of stocks that did well and that joined the rally was the entire NBFC pack. You did allude to Shriram Fin, but even other names too, especially in the last hour of the trading session, did quite well. Have a look at names like Chola Financial, M&M Financial, L&T Finance. All of these stocks continued the rally that they've seen in recent times. So you alluded to the fact that ONGC was one of the top gainers as far as Nifty was concerned. not only ONGC, the entire oil and gas pack today was in focus. A lot of news flow coming in there, but all of the stocks did quite well. In fact, a name like GAIL up over 3.5%. Now, coming to the broader end of the markets, if you look at the NSE 500 index, have a look at Godfrey Phillips. The stock up on very, very strong volumes as well. And today, ended as the top gainer as far as the NSE 500 was concerned. Tanla Platforms, another stock, some positive news flow coming in terms of the company saying they signed a commercial agreement with the global tech major to go ahead and print stamps. This particular stock too, today up on very good volumes. Aurobindo Pharma, the buyback cheer coming in, stock ended high by 4%. Very few laggards today, but a few names. Sundaram Finance, even though the entire market did quite well, Sundaram Finance down almost 5% in the session today. Rail and defense stocks, if you look at the kind of moves that they've seen, they are due for a bit of profit booking, and today a lot of them saw profit booking. Railtel down 3.5%, G Shipping down 3%. The shipbuilding names, Garden Reach, Cochin Mazur, all of them down between 2.5% to 4%. And when you're talking about Tata Steel, the last stock on the radar, some negative news flow there in terms of an outlook downgrade coming in. Stock ended lower by 1% today.
Okay, all right, Vivek. Thanks a lot for joining us and giving us that neat list out there. Well, let's go to our experts who join us on the show. We have Mayuresh Joshi of William O'Neill, who will help us out with some fundamental analysis, and Shilpa Rout of Prabhudas Lilladher, who joins us on the show. Hi, lady and gentlemen. Thanks a lot for joining in. Shilpa, you go first. I mean, this buy on dips, participate on the upside is the way to go by it, right? I mean, people thought that maybe we'll pause at 24,000. Then we had a bit of a headwind at around 24,450. But we've got past that. And now all eyes on the 25,000 odd mark. So a couple of questions. If you're long, where does your stop loss come in at? And what are the highs you see on the Nifty?
Definitely, Nigel, if you are long and you have been trailing your stop loss, for now, the trailing stop loss should be placed at 24,250. I believe that is a very strong support zones now. In the past 1 week, we have seen that we have tested those zones, a couple of times, and again, a strong bounce back has come in. So 24,250 is a good support for a positional long for 25,000 to 25,300 targets. Likewise, Bank Nifty also, as long as we are holding 51,500, 51,800 mark, this is a very strong support zone for the index. And from here, like we've been discussing, 53,500 to 54,000 definitely is on cards.
Okay, all right. Got that. Let's straight away get to some of the stocks that have been in focus today. Aurobindo Pharma surged over 4% after the board said that it would be considering a proposal for a buyback. Ekta is here with more details. Ekta.
Well, yes, Aurobindo was in focus in today's trading session. There will be a board meet on the 18th of July to consider a proposal for a buyback. It would be the maiden buyback by the company. Now, the gross cash is around 6,500 crores on their books and a net cash of around 150 odd crores. Now, to be more specific, they had a gross debt as per their Q4 call transcript of $758 million, net cash of $18 million, and the business had a net cash inflow of around $12 million before the PenG capex in which they incurred in Q4. Now, analysts say that one of the reasons why they are considering a buyback is because the PenG capex, or the capex that they had, has now been completed. But according to some analysts, the quantum is something to watch out for, because the quantum may not be that significant. In fact, some are estimating that it could be around 1,000 to 1,500 crores in terms of a buyback. But nonetheless, the stock was excited on the back of a proposal to consider the company's maiden buyback.
All right, got that, Ekta. Thank you very much. Well, let's ask Mayuresh about this. Mayuresh, Aurobindo Pharma, any interest?
Afternoon, Surbi. So as a clear disclaimer, we continue holding this stock in our global portfolios. So outside what Ekta just mentioned, I think two things that might act in support of the earnings momentum. Obviously, you've seen a lot happen in terms of the Revlimid sales. But I think the pipeline that Aurobindo has, specifically in terms of its oncology and its immunology biosimilars, a lot of those drugs are in phase 2, phase 3 trials. And therefore, 54 ANDAs in approval for the specialty portfolio would mean that if these approvals come through over the next few quarters, you've got both pricing in your favor as well as margins in your favor. And therefore, the consolidated margins that they posted in FY24 of 20%, 22% for Q4, might actually show an uptick and support both the US revenues as well as its global revenues as well. The last aspect, again, is the quantum of buyback. And I completely agree with Ekta. I think it should not be a substantial one. That probably got the street expected at this juncture. But I think overall earnings should probably still continue faring well for Aurobindo. So yeah, I think we continue holding this stock in our global portfolios.
Okay, all right, got that on Aurobindo Pharma. Then time for the sector of the day. Tire stocks, well, they have been driving higher on the back of the price hikes. Sonia joins us to fill us in with more details on that. Sonia, take it away.
If you look at it, there has been a price hike across the board for most of these tyre companies. And the one that we're looking at this afternoon is MRF. MRF has announced a price increase effective 18 July. Truck tyres have been hiked by approximately 2%. Passenger car and radial tyres prices have been hiked by in the range of 3 to 7%. So far, there's been no hike in two-wheeler tyre prices, but the blended price increase works out to be about 2%. Now, this is the first price increase that MRF has taken in order to pass on the higher raw material costs to consumers, specifically rubber and crude that is used in the manufacturing of tyres. Now, if you look at it, the other players like Apollo, CEAT, JK Tyres have already taken approximately 3% price increases, and the price increases still lag the cost increases that have been seen in the last 3 to 4 months. So, despite the prices being passed on to consumers, there could still be some margin pressure that the companies face because of higher rubber and crude oil prices. So, overall, yes, it's a positive for MRF, the fact that demand is strong enough that they were able to pass on the price increases to customers. Back to you.
Thanks a lot for that, Sonia. Well, Mayuresh, what are you making of this? You know, a little bit difficult if you have, a tire that's ripped, if the prices are going up. But for the time being, if you have the stock, you're quite happy today. What's your preference among these tire names?
Absolutely. In fact, I was about to change my tires and I'll have to in the next few days. So I think my cost is going to go up. Having said that, I think if you probably have a construct done, Nigel, in terms of JK, Apollo and CEAT, JK and Apollo largely mirror each other in terms of their product mix. A large part of their business is catering to the MHCV part of the business. Around 50 to 55 odd percent, 25-30% comes in from the PV side of the business. Around 60% comes in from the replacement market. And 25% for OEMs, and the rest is catered by exports. So to that extent, I think the expectations in terms of a strong recovery in the second half for the MHCV segment might actually boost the volume numbers for both Apollo and JK Tyres. Obviously, they've done a lot of innovations as far as green tires are concerned, specifically in JK's case, and more innovations in terms of puncture-free tires as far as the PV radial tires are concerned as well. So to that extent, I think debt equity not too elevated for both these players would keep them in a good mix. When it comes to CEAT, as an example, I think a more mix in favor of the PV market or PV players will probably mean if there is some element of slowdown, as we are probably expected to understand on what has probably happened with price cuts happening with M&M and Tata Motors, there might be some elements of issues happening there. So I think JK Tyres, Apollo is something that we will continue to prefer in terms of our EPS-RS ratings and how we look at it at Pakistan.
Okay, all right. So that's about the tire names. Shilpa, I want to ask you though about Bajaj Auto. That comes out with its set of numbers, but today that stock, was up and about, one of the top gainers on the Nifty. How are the charts looking?
Nigel, Bajaj Auto, if you see the option chain and the chart, 9,500 zones hold, very strong. This is a very strong support, and we have been recommending this time and again with that stop loss, for targets of 9,800 to probably 10,000 also zones positionally. So this move today towards 9,700 definitely, sparks that, it has more potential and more steam left to see 9,850 to 9,900. So tomorrow also, if you see that stock opening, on the higher side, then rushing for a new trade, I wouldn't recommend, but, buying on dips with support at around 9,500 zone is a very nice strategy to stay long and look for targets of 10,000 and maybe more for the stock.
Okay, all right. That's a word on Bajaj Auto. Shilpa, just a word on tires as well. We're just discussing it purely on charts, just looking at the momentum. Anything that you like in tires?
Yes, Apollo tire, if you look, certainly that today it has gained, very nicely, very massive upside we have seen. The stock trading at around 540 right now, I believe it has much potential to test 580 to 600 zones. So again, on declines towards 520, a buying strategy is recommended. I believe from his stock will definitely move towards 565, 580, 600.
Okay, all right, got that. Stay on, some more questions in just a bit. Let's move to the earnings corner. Bank of Maharashtra was up almost 6% after it delivered in the first quarter. strong asset growth lifted IREDA as well. So those were the two important earnings we were looking at from the financial universe. Abhishek is here with the wrap.
Well, to begin with Bank of Maharashtra, it looks like the yield aided the net interest margin or the net interest income this time around. So if you take a look, interest income is up almost 7.5% quarter-on-quarter, which compares to a loan growth of just 2.7% sequentially, clearly showing that the yield has been pretty strong for the bank. So NII was up 19.6% YOY and about 8.3% sequentially. Sequentially, the loan growth was just 2.7% quarter-on-quarter. Other income was down 12.5% quarter-on-quarter, and that was on the fact that fee income declined by more than 30% quarter-on-quarter. So weak fee income did impact the other income. Cost to income ratio has improved 37.9% versus 38.7% in the previous quarter, and this was on account of the other expenses which declined by more than 8% on a sequential basis. Now NPA provisions that spiked up by 28.3% quarter-on-quarter, largely to do with seasonal in nature, and now that asset quality or provisioning for asset quality is now normalizing, so that will help, that will actually lead to a rise in credit costs, which is on an annualized basis it's at 1.1% only. Gross NPA and net NPA both have increased by 1% in absolute value. However, as a ratio, gross NPA ratio and net NPA ratio both have declined on a sequential basis. Coming on to IREDA, strong AUM growth, they have had about 34% YOY and 6% quarter-on-quarter with respect to AUM growth. Sequentially, if you see, gross NPA ratio and net NPA ratio have declined on a quarter-on-quarter basis. Net interest margin has improved to 3.29%. This compares to 3.23% in the same quarter last year and about 2.85% in the previous quarter. So the NII growth is at 37.6% YOY and about 5.4% sequentially. The operating profits have increased more than 30% YOY and they have declined by more than 8% sequentially, given the fact that there was weakness in other income. However, PAT was up 30.25% YOY and about 13.7% sequentially. Back to you.
Okay, all right, Abhishek, thanks very much for that. So those are the earnings with respect to those two companies. Now, HDFC Life gained after it reported a 15% jump in net profits on a year-on-year basis in the first quarter. Yash is here with the earnings fine print. Yash.
Well, Surabhi, to summarize the numbers for HDFC Life in the first quarter, it was, better than estimates on the top line part, which is the annualized premium equivalent, as well as the new business margin. But margins came in lower when it comes to, the company in the first quarter. I'll start with the top line itself, new business premium. That was a slight miss to our estimates, just about 2%, came in at 6,400 crore rupees versus 6,540 crore rupees, but it was a 9% jump on a year-on-year basis. Total annualized premium equivalent that was ahead of CNBC-TV18 poll by about 100 basis points, came in at about 2,866 crore rupees versus a poll of 2,846 crore rupees. And importantly, it was a jump of about 23% on a year-on-year basis. Retail APE was also ahead of CNBC-TV18 poll by about 500 basis points, came in at about 2,467 crore rupees versus a poll of 2,453 crore rupees. Importantly, a jump of 31% on a year-on-year basis. Now, the numbers started becoming a little weak from the value of new business level. So that was 2% lower than CNBC-TV18 poll, but 18% growth on a year-on-year basis. And as I said, the ULIP portfolio for the company grew at a very strong pace in the first quarter, because of which margins came in 64 basis points lower than our CNBC-TV18 poll and about 120 basis points lower on a year-on-year basis.
Okay, all right. Thanks a lot for that, Yash. Mayuresh, what are you making of this one? HDFC Life, it gives you spurts of hope and then some news comes out of somewhere. So that's actually been a big underperformer in the last few years. But do you think it's set to do well from here on and participate?
It has, yes, it has underperformed, Nigel. And to that extent, I think the product tweaks that are expected to be undertaken right now, specifically after the budget changes last year, will pay dividends in the next few quarters. They will also ensure that as more penetration start taking place, the upfront expenses and commission costs, which will be elevated, will start coming lower. But we'll have to really wait and see in terms of how the outperformance in terms of numbers takes place. If you ask me in terms of the stack up, as far as insurance players are concerned on the life side, SBI Life still seems to be better placed on most of these parameters. Their overall expense ratios are in single digits. They are expected to see significant growth because their product mix is far better than the rest of the players. And their embedded ratios, both embedded value and return on embedded value as well, should probably see improvements because of the sheer volumes that they will do because of their bank assurance with SBI.
Okay, all right, got it. Thank you, Shilpa and Mayuresh, very much for being with us. Good having this conversation with you, and we look forward to the next one. Take a break on that note. We'll come back to we'll come back with a lot more on the other side.
Welcome back to Markets Forward. Then let's get you some of the top corporate voices that we had all through the day here on CNBC-TV18. First up, HCL Tech reported a mild beat on revenue as well as margins in the first quarter. The management said that they were comfortable with their annual revenue guidance of around 3 to around 5% and margin band of around 18 to around 19%. The management said that they had factored in a soft quarter and expect quarter two to aid growth with all geographies and verticals doing pretty well, except the financial services. The management also added that they had expected higher deal wins of around $2.5 to around $2.3 to $2.4 billion this quarter, but some of these deals got pushed to the next quarter. We also spoke to the management of Gateway Distriparks. Well, the company said that the Red Sea conflict, higher freight rates, and container shortage impacted volumes in the first quarter. He added that the first quarter has seen a degrowth of close to around 9 to around 10%. The company also clarified that they are not in talks with JSW Infra for sale of the CFS business, but they believe that the CFS business could be valued at approximately 1,000 crore rupees.
Okay, and with that, it's time to move to our last element on the show, which is the events that we need to watch out for tomorrow. Sonal has the list.
Thank you for that. Well, it's a long list. We have a lot of earnings tomorrow, so watch out for those. Bajaj Auto, Aditya Birla Money, Century Textiles, CRISIL, DB Corp, Himadri Specialty Chemicals, then there's Just Dial, Jubilant Ingrevia, and TV18 Broadcast as well. A long list of stocks which will go ex-dividend tomorrow as well, so watch out for that adjustment. Lupin, Kirloskar, there's IDFC Limited, Sundaram Brake Linings, CDSL, Nestle India, Thirumalai Chemicals, Dr. Reddy's, M&M Finance, TTK Healthcare, Shriram Pistons and Rings. Tomorrow is when Zee Entertainment will consider a board meet for fundraise as well, so watch out for that. And the Department of Telecommunications first meeting of Stakeholder Advisory Committee will be with the telecom services provider, will include all the big telcos in the country. So that will be an important event. And lastly, in global events, we have some macro data, US retail sales and trade data for the month of June.
Sonal, for that, we'll keep an eye out on all those data points. For the time being, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.